This week's housing market has seen significant shifts and potential signs of movement toward equilibrium. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, October 20th. We know that selling or buying a home can be stressful and confusing. In this series, we use our more than 50 combined years of experience helping clients sell or buy homes to explain what the latest San Ramon real estate market trends mean for you as a homeowner who's thinking about selling, or as someone who is looking for a house that you will love to call home. Let's start with this week's numbers. This week we had 23 homes asking an average of $1,945,000. Which is 4 homes more than last week's 19, with a lower average asking price. 4 homes went pending, which is lower than last week's 7 homes, with an average asking price of $2,117,000, which is significantly higher than last week's average asking price for pending homes, which was $1,503,000. And 3 homes sold this week, which is less than last week's 5, with an average sales price of $1,896,000, which is up from last week's average sales price of $1,741,000. So now that we know how this market performed this week, let's look into the broader trends that provide insight into the overall health of the market and the potential future direction. Before we look at these indicators, if you find this information helpful, you can subscribe so you don't miss out on future updates. And why not share it with a friend too? Everyone deserves to be in the know about their local market. All right, let's take a look at those other market indicators, shall we? Inventory is up by 4 homes this week, or 21% from last week. It's still hovering around the 25 number, and that's been this way for the past 8 months, hovering around the same 25%, or 25 homes, which is about 30 to 60% lower than what we typically see in inventory here in San Ramon. And I don't expect to see that number continuing to rise because the coming soon numbers have stayed low. We only have about 5 coming soon listings on the market right now. So even though we saw an uptick in the number of homes on market this week, I don't expect to see that continue as a trend. The turnover rate dropped a little bit this week, which again isn't surprising since we saw the number of homes increase. That typically translates to a lower turnover rate. We were sitting at around 140% of a normal market last week, and we're now down to about 110%, 9% above normal this week. 110%, 109%, that's basically a neutral market, not favoring supply or demand, seller or buyer. It is important to note that the lower price homes continue to sell while the higher price homes are taking a little bit longer to sell, and that is why we're seeing a slowdown on the turnover rate as the average asking price increases a little bit. As turnover rates remain under 150% or so, like we have seen for the past several weeks now, we're not surprised to see that the over-under price has reduced as well. We are still sitting nicely at about 2% above asking, or $38,000 above asking for the average closing price. Which is still very strong. And it's important, again, to remember that this is talking about homes that went pending about 30 days ago, so this is a lagging indicator. We expect to see the over-under come down further based on the turnover rate dropping, inventory climbing a little bit. which we think makes it even more important for sellers to be very specific and thoughtful about what price they decide to sell their home for, their asking price. Average sales price is down a little this week as well, down 1% or about $20,000 from last week. It's still sitting at just under 1.9 million as an average closing price. And if you look, as you look at this chart, you'll see that this whole year has been extremely volatile, but it's kind of stayed roughly up and down around the 1.8 range. Over the past, so this week is the first week that we've seen average prices drop a little bit. For the past 7 weeks, prices have gone up over $200,000 in total. The volatility on this chart is mostly due to the fact that we have a small sample size. So any shift in the number of higher value homes selling or lower value homes selling will significantly impact this 30-day average. And if you look at the asking price of pending sales, like this week, we saw the average over 2 million in the pending sales price. I don't expect that this slight reduction in value this week will continue. I think we're going to see this week be a small dip in the average sales price, and we'll go back to increasing sales prices slowly over the next couple of weeks. The high-tech stocks dropped 2% this week, which is disappointing after we saw a nice recovery last week. I assume that the reason we saw this significant drop, unfortunately, is due to the war in the Middle East, which obviously is not a good thing. However, when taking this into consideration, I think that indicates that the dip in the value of this stock portfolio doesn't necessarily translate to a loss in value in high-tech firms, which means that buyers still have a good amount of money to work with when they're coming over here to look for homes. Obviously, it still means that we need to pay attention to this indicator and keep track. And then, again, unsurprisingly here as well, interest rates went up again this week. They went up 4 basis points, and they're now at 7.63%, which is another record-setting number. Unfortunately, we're just about a quarter of a century since the last time rates were up this high. And this slow and steady increase is putting a lot of downward pressure on our local market's value, a market that generally seeks to naturally increase in value. So these interest rates remain the one key factor in keeping rates or keeping home values from really taking off and skyrocketing again. So, the takeaways from this week. Overall, we're seeing all indicators experiencing a downward shift, hinting at a potential move towards market equilibrium. While we're not quite in a buyer's market, the strong seller's market seems to be weakening. However, it is crucial to remember that this data represents just 1 week and is based on a very small sample size, making the indicators quite volatile. The future trajectory may depend, and probably depends, on how the United States manages the ongoing Middle East conflict and that conflict's duration. This war is likely to exert significant pressure on the overall economy, subsequently affecting our housing market. Currently, our housing market can withstand a few weeks and even maybe a few months of international turmoil and market concerns. But if any of these indicators continue moving in an unfavorable direction, it could prove challenging to rectify the situation. It is a pivotal moment for the housing market, closely tied to global events and market stability. Thank you for joining us for this week's market update. We hope the summary and commentary helps you understand how our market is impacting your options. If you have any specific questions about navigating the market to sell or buy a home, don't hesitate to drop a comment below or reach out to us directly. We're here to guide you every step of the way. And if you found this information helpful, don't forget to share it with your friends and hit the subscribe button and bell buttons so you'll always stay in the know about the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.